Hi, welcome to the Market Alert for Wednesday, the 14th of January 2015. And just before we start, let me tell you how I played this market yesterday. I was sitting here watching it live as usual, and also chatting to a member of the team as the market unfolded, because we were concerned about the amount of volatility we've had in the market and the lack of trades. So the decision was taken to actually alter the PPT trade markup, as we've spoken about in the previous editions of the Market Alert, to 25, just to give the market the opportunity to show any potential signals, because we've not had that many trades, and those that we've had have been quite poor as well. Based upon the amount of volatility, and you can see this from the first bar, we've got 100 nearly, well, it's 87 points in this bar, and by the time we get to here, the market's done over 100 points, and we're trading at the 17,900 level as well. Just cast your mind back to the daily chart. Remember, we drew in the 17,925, and once again you will see that the high here is 17,924. So by adjusting this, and I know I'm going to increase the risk, I've spoken about this before in the Market Alert, there is a chance of actually getting in on one or two of the trades. And there you can see that the first trade didn't produce the 20 points until we had the second signal. It was part of the second signal, which went down to 17,855 or 17,850. You can see there it came close to taking the trade out, but then eventually continued to move lower. And then the same with the second signal as well. This continued on down as well through the first one, which is the 17,850. Down to 17,800, and then down to 17,750 before finding some support and coming back there as well. We then see the market later on in the session. Again, the volatility returned. If we look at this price bar here, you can see that from the low to the high, we're looking at 60 points just in this bar. This means that the volatility had returned to the market. It's definitely confirmed, and you can see, and again, this bar here is even longer than the previous one, and that's sitting at 105 points in that bar alone, driving through and finding support at the 17,550 level. So the volatility is still around in this market, but the good thing is this bar here, the range is 22 points, and this one I think was 21 points. So we're getting back down towards that 20-point level, but I had to make that adjustment to cater for the moment for the huge volatility that we've got in this market. And of course it did increase the risk, but then again that can be prorated by reducing the bet per point, so that the exposure remains the same as a percentage, i.e. 1% of the account value with a maximum of 3, but it does increase the number of points first and foremost, with having to put the stop with the range of the bar, being a lot wider, which increases the potential stop. So in this case, you'll see there's a 33-point stop on the first signal, and on the second one there was a 35-point, and that's just the difference of going from that 20-point range where you normally get a stop of around 20, 22, to increasing it by another 8 or 9 points there. In the daily charts, let's have a quick look and see what the market did during yesterday. You can see this huge range for yesterday. Once the market saw the volatility increase during the latter part of the session, which is unusual. So let me just draw in from the low to the high and just see what the whole range was for yesterday, if it will allow me. This fib's in the way, so let me just move that out of the way for a second. And from the low to the high, 447 points. Definite weakness in this market. There's certainly not going to be any buying in this market for the foreseeable future. There's no reason to see any buying in this market, in particular that crude oil continues to fall as well. So the question is, how far is the market pulling back? Well, let's have a look by using the fib extensions, and I'm going to draw off this bar first up to this high, and we're already through the 76% retracement. This is the sort of rolling fib that I use. I just look across to the left, look for the next low, and then draw in from the low to the high. That one's already through, so I will remove the fib from this measurement, or from these 2 points, and then from the same again we can see that we're looking at 17,400 level, psychological, 76% of 17,414 there. So we'll save that and keep that in there as well. So that's what we're looking for. There's a lot of volume for yesterday as well. There's been a lot of volume, and certainly an increase in the last few days and over the last couple of weeks, compared to when you see how the volume dropped off here. We saw an increase here, nothing back on the upside, absolutely nothing, but it was during the festive season, and then we're seeing the market sell off. We saw some support coming into the market and then hitting the 76% retracement. Just drag this over so you can see it a bit more clearly, and then we see yesterday, very indecisive day, the market trading up to begin with, then back down. And also bearing in mind that the market actually traded up 250 plus points yesterday in the electronic session before the market opened as well. So on the news front today, we've got from 2:30 really is only what we're interested in. Carney speaking, no doubt going to give the market some other economic benchmark to have as his decision to say when he's going to increase interest rates, but it'll certainly be interesting to see what he's got to say. Don't believe a word of it. That's the first thing and the first rule with all central bankers: never believe a word they say. But again, it makes for entertainment to see if it actually unfolds, and it generally doesn't, because they will have switched the criteria to something else. So Carney speaking at 2:15. How much of an effect will this have on the US market? That I don't know. But if you, we're not open until 2:30. It's 2:15, so with a bit of luck, you will keep it short and sweet. But you will be able to tell from the pre-market volatility what he is actually saying and how the market's actually reacting as well. And finally, on the implied volatility, this increased slightly yesterday, not an awful lot, considering the market's trading range yesterday. But like I say, 250 points of it were to the upside pre-market. So it's not as dramatic as it actually looks there. So a slight increase for the implied volatility. Right, that's it from me for today. I'll see you in tomorrow's edition of the Market Alert. As ever, thank you for your support, very much appreciated. And as ever, thanks for watching. I shall see you in the next one.